Okay, so today will be the first episode in this 2022 model series, mastery series. And this is an ICT model. Today was an interesting day because we can see here that I put a trade on. And this yellow line is the open of this week, okay? So we had a rally in the morning session into the first half of the day. I wasn't able to get in on this first presented fair value gap. Still trying to work on capitalizing on the morning session better. It's a little bit too fast for me at this point. But anyway, I was able to capitalize in the afternoon with the 2022 model, which is basically a reversal pattern. So what I was looking at here is if we look at the 15-minute chart, we're in a trend, right? Clearly. This chart's better. This is just to see what the opening range gap looks like. But this is the electronic trading hours session in this middle chart in the top row here. And what we have in here is a gap. Okay. Obviously, looks like we're in a solid premium. Okay, but I did use a concept I got from Al Brooks on this one, and that is that generally, when you see this much of a spike up, the first reversal probably isn't going to be successful. So with that said, this is a 15-minute chart. I'm expecting higher prices and then maybe later a reversal, right? Which we may or may not have gotten in here. Later we find out we didn't. But so the gap is right in here. Let's outline that. Doesn't have to be perfect. I don't have the same precision as ICT, but that's okay. You don't need to be profitable. Okay. And that's where we are on the 1-minute chart here, right? So we have this fair value gap up on the 15-minute chart. We have price breaking above this week's open. Let's look at the weekly over here at the top left. Okay. Price comes down, takes out last week's low, and then reverses above its open, right? And you can see there's a gap in here too, which has been totally closed in. So we trade above this, the new week open, and I'm not sure what that's telling us. I think that's strength, but I think it's something to consider. I'm not sure exactly what the implications of that are, but I mean, the week's open is being reversed, and that wasn't a huge part of this trade, to be honest. I wasn't really thinking about it that much. I just noticed it later. But anyway, we come down into it. Strong bull trend day. We're waiting for a pullback. Not really good one. These are all continuations. Like continuation, continuation. This is more of a breaker in here, or a 2022 model, whatever you want to call it. It's a reversal model. All right. Break above this high. Stop below that low. We'll have taken a little bit of heat on that, but would have been okay. I wasn't comfortable with that one. I don't think there's much of a fair value gap or a gap at all in there between bars on the 15-minute higher time frame, so I wasn't okay with taking that. So anyway, you know, this is all missing out. This is all the kind of stuff that makes you feel FOMO on your next trade, but you just gotta be patient. Your setup will come. And mine did. The shaded area being the 15-minute time frame, right? This is a breaker, so this is a reversal on the 1 minute. All right, but 11:22. You look at this 15-minute chart, either one's fine, but there's no swing being reversed here. 11:15, 11:22. This is just a spike straight up. So nothing's being reversed. So that is not, if you're at my level, that's not a good short trade to be taking. All right, I don't take those. I see this as the beginning of a pullback, a higher time frame pullback. Okay, so we get lower, lower, lower. I would have liked to see this low get broken here at 11:45. It didn't happen, but we did get down into this fair value gap, or gap, whatever you want to call it, the space between two bars. Okay, and then these bodies close below these bodies. So to me, that's pretty good. I think that's pretty good if we're looking for this little breaker or reversal pattern. Otherwise, I don't really like a higher low after this low, right? And then I'm buying this breakout, right? Because I don't, I'm not expecting much of a pullback here. I'm guessing people are going to be rushing to get in, especially when this is like the first notable pullback with like a few swings down, getting into a deeper discount, taking out some lows, falling in this fair value gap, uh, which is also a higher time frame fair value gap on the 15. So I buy this. I actually meant to buy two, but that's okay. I added more later, a little bit more of a premium. You can see price never even really gets back down to my initial buy. I don't know why this happened. I don't know why it spiked so hard. Okay, so obviously we're taking out sell side up here. I couldn't get out on this candle. This is a 1 minute candle. Went straight up and immediately rejected off of this ICT rejection block. Right, so when I saw that, I basically just put my order right there. I didn't want to try to aim for these highs. And this is kind of what I was aiming for initially. I just don't like to take limit orders because I don't expect the market to move this quickly. I try to time it with a market order, get a little slippage, or get stopped out below a bar or below a swing and profit. So anyway, I put two shares on here. I'm the shoestring trader, so generally lately I've been trading with one share, but was able to get two on this one. Not too crazy today in terms of intraday ranges, right? So boom, I got filled. That was on this candle. And then the market just took off. So I'm freaking out a little bit. Obviously, I want to get a good profit. Part of you saying like, "Oh my God, this go up another 200 points." But with more experience, you start to find that to be a little less likely that the market's quick to correct these kinds of moves, especially like near the end of a trend. So what I did was I dropped down to the 15-second time frame and tried to basically get out below the nearest swing, which is what I did here. And that's a whole trade. Partial at the rejection block. Stopped out with a profit on my runner below a 15-second swing. Market gets a little bit higher, but that's okay. This is an outstanding trade, so I'm happy with that. Okay, and we go sideways a bit. Head and shoulders. Here's a head. Here's a shoulder, right? Some traders are going to be shorting below this bar up here as this shoulder takes place on that swing. Okay. If they're nimble, maybe they took profits below this low. And if you're not so nimble and maybe more of a beginner, then maybe you short below this low, expecting a head and shoulders reversal, and you will have been stopped out here at ICT's 1 p.m. macro time, right before you would have been right if you kept your stop here. This would have been dangerous too, but you would have been safe. Okay, gets lower, 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 and we get a 15-minute breaker. Cool. And then what happens, this is what makes today so interesting, because what I would have liked to have seen, right, for an entry, I'm using a 1-minute reversal within a higher time frame 15-minute pullback. Okay, so when I see this, if I want to be able to participate in this 15-minute breaker, I'm executing off the 1 minute. So I need to see a pullback back up into premium if I'm looking for a short, depending on how you measure premium. This kind of almost qualified as that reversal pattern. You got the lower high, lower low, higher high, lower low. But if you took this high where your stop would be, where my stop would be, right? And I'm entering below this low on a breaker. This is shoestrings idea of a breaker. This probably isn't what ICT thinks is a breaker, but this is my how I view it. Right? Stop up here, entry at this low. I would have had to aim for the New York low. Okay? Just oops. Just to be able to get a 2R trade. Not even a 2R trade. This is 2R. This line is 3R, 4R. Okay? This is where my stop would be. That's a New York low. And we didn't get anywhere near it, and instead we reversed back to the upside. So if you're a beginner, that might make you think that, okay, 2022 model isn't effective, or in this scenario it's broken, or whatever. Might be scary anyway. But the cool thing is that actually this is an effective reversal pattern down here too, even though we reversed the 15-minute and that breaker would later fail. If we incorporate a fractal game plan to this, a fractal understanding. Well, if we look at the top left chart, I'm going to switch that over to the 1 hour. Okay, this is a new day gap. This is a 1 hour time frame from 8 a.m. to 12. This is that reversal that I traded short. But as you can see, there's been a shift to bullish on the 1 hour. And where I was shorting, or where I would have been shorting, sorry, I didn't short, I went long today. Where I would have been shorting would have actually just been a higher time frame pullback. So if we look later on in the day, we don't have a 1 minute breaker inside that 15-minute breaker until 2 p.m., right? And that, if you went in with one contract, exited on a stop above a swing, that would have got you to, so this is the breaker here. 3 are down to that low, but we're stopping on a swing. So that would have been a little more than a 1 hour trade. So you could have gone short in there, but that was really just a higher time frame pullback on the 5-minute, coming off of a 5-minute breaker and a 1 hour trend. So kind of messy with the explanation there. This is my first video. Things are going to be a little bit messy, but I'm going to stumble my way into this YouTube channel and figure it out as I go along. But yeah, that's what I find interesting about today. You have this 1 minute breaker continuation higher, 15-minute breaker to the downside, 15-minute reversal in here. All right, not a very good short in here, so we avoid that. It's just, you're just reaching too much and the risk is too wide. Okay, and then we have this 5-minute breaker in here. That's right in here. Lower high, lower low, higher high. Right, and then basically reclaims the 15-minute fair value gap in here, sets up another breaker to long. Little pullback. I wouldn't have been stopped out until this low if I was trading one contract. All right, so that would have been about a 2-hour trade. Not bad. Not bad for exiting on stops. Okay, and besides that, one note about this trade. This is an outstanding trade. This is like the gold standard of what you want to achieve because I might FID set up for risk reward. So this is a low-hanging fruit target at this high. My first entry is at 3R, this line here. If we get to that high, that's potential 3R return. Second one's a little bit better than 2R, but between the two of them, it was about 2R. So what I'm aiming for is 2R low-hanging fruit, and then I'm looking for a measured move off of the retracement that I'm looking to enter on. So whatever that retracement is down, add that to the high of the retracement. Oops. I'm looking for a measured move up, and that's basically what I got today by exiting on stop, right? It hits a measured move, and I'm taking profit at the next swing. lower. I'm getting stopped out below the last bar to touch that measured move target to get as close as possible, right? And if it just keeps rallying up like crazy, then I'm keeping a tighter and tighter stop. Okay, so I think that's what I want to cover today. It's a little bit sloppy. If anybody dares to watch this, let me know what you think. Let me know if there are any topics you would like me to touch on, how I can improve, how I can help you improve your trading. And besides that, good luck and good trading.